and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 9th day of October, 2019. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. Let me put up a chart of the S&P 500 Emini Futures. This is going to be a daily chart. If you cannot see the chart, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. There will be days you're out of the office, away from the desktop. Not to worry. Grab your phone, grab your tablet, grab any internet-connected browser, and point it to youtube.com/CFRN/live. There you will find a real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. All right. Oh, funny thing happened on the way to the show today. Let me show you. Let me show you this funny thing. Here, I'll do it this way. How about that? Okay. Speaking of YouTube.com, you may have seen my post titled "People Crack Me Up." Well, they do. I'm not kidding. Where'd I put that thing? Oh, here we go. Here, I'm just going to I'll drag my other browser up there and simplify the process here. Remember the post I shared with you yesterday, and I put somewhere on the internet a couple days ago, I guess, about the message boards and the chat rooms and the naysayers and the doom and gloomers, and you know, we should pray for them. Maybe later in the show. So, funny thing happened on the way to the office. I got a message from a Mr. Thumper. That would be Thumper 1. If you were really religious, you ever heard me say I was religious? But I digress. If you were really religious, you wouldn't charge $4,000 for a method that does not work. All caps. See, on the internet, that means he's yelling. LOL. Okay. Well, my response, we are not religious. Religion, if you do a word study, means return to bondage. Did you know that? It's true. You can look it up. It's made up of two words. Re and religion. Get it? Okay. But look it up. That's a true story. I bet your pastor might not even know that. You could maybe get some points. Our goal is to set people free by providing the education they need to become traders. Also, I'm not sure what your definition of working is, because he clearly said, he yelled, does not work. I'm not sure what your definition of working is, but over the past 62 weeks, our traders have benefited from 2,802 alerts. In the interest of full disclosure, 560 of those were stopped out. If you have a system or method that produces better results, please come on the radio show today and share it with us. I'm guessing your method is top secret, so you won't be able to. We, on the other hand, do what we do in front of a global audience, live in real time. I look forward to seeing your results. Please join us. I mean, I show you mine. I don't really want to see yours, but I'll look at it if you're willing to show it to me. Oh, P.S. Also, along with everything else, you got the price wrong as well. It's more. Keep on thumping. You'll figure it out someday if you hang in there. Namaste. Now, for those of you that don't speak namaste, it just simply means, it's a greeting. The light in me recognizes the light in you. No incense required or flute music. Okay. Thanks, Thumper. I needed something to put a little pep in my step today, and you were right there for me. Thank you. This Thumper person, Mr. Thumper, I'm sorry, he's trolled our YouTube page for some time. You never know. It's when he's going to stick his head up and, you know, say something that makes him look really silly, and then he'll disappear for a while and then pop back. He never replies to my reply. Now, you see, I actually do. There's a part of me, you know, it gets all whacked out over, but that's just a tiny part. The bigger part of me feels a little bit sad, because here's someone who is obviously so unsuccessful at trading and so miserable because of it all that they have nothing better to do than to troll YouTube videos and make false statements. Fake news. it's not news, but anyway. So there you go. All right. I assume you can all see my chart at this point. Everybody that wants to see it, even you, Mr. Thumper. Okay, this is the daily chart of the S&P 500 E-mini futures. We did up fibs yesterday. We did fibs on just the last leg up. We did it on this whole move. The area that we've been highlighting now, for some time, as price was coming down, we highlighted this area because we thought it just might be good support. It bounced us from basically 29.50, from 29.50 up to 29.90. That's a pretty good bounce. And we came back. Okay, is it going to hold a support this time? Because remember, it was resistance, 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 support. Support gave way. Made a nice drop. I'll show you why we stopped where we stopped in a moment. Buyers came in, bid it back up to the same area where now once again it has done its job as good resistance. Pushed the markets down. Oh, we had a swing high at 29.58 and it pushed us to a low of 28.88 and a quarter. And the market is trying to work its way back up to that area again. What happens when we get there? Well, let me show you this first, and then we can talk about that. All right. As you know, the green line we simply call the BBC, bull bear cross. Bullish, when price is above the BBC, we anticipate higher prices. Plain and simple. And when price gets below, we anticipate lower prices. Now, we could complicate that, we could convolute that, but everything we do is simple by design. A lot of blood, sweat, and tears went into taking something that can be very complicated and just kind of making it drop dead simple. If we're below, look for lower prices. If we're above, look for higher prices. Below, above, below. Now, price always reverts to the mean. In our case, the mean is the BBC I just spoke of. When we approach the BBC from below, we expect it to be good resistance until it isn't. And when we approach it from above, we anticipate it to be good support till it isn't. Resistance, support, resistance, resistance. Got through it, got above it. Here come higher prices. And then back below it, right? Price always reverts to the mean. Look at that, right there. Price pulls right up to it and is rejected. That's important too. Now, you know that only three things happen at a weekly trading zone: consolidation, rejection, and the slice. The BBC has that same characteristic. Three things are going to happen when price reverts to the mean. It's going to consolidate at the BBC, or be rejected by it, or it's going to slice right through it. And somebody goes, well, that seems kind of simple. Thank you. We worked real hard to make it that simple. Okay, so we got a leg, we got a retracement, we got a leg. Now, what comes next? That's a great question. Where do we know we have good support? I don't know. That's an area. It's not a specific number on the chart. When price was falling here, it was indeed good support. And it held here for a few sessions. Okay. And then support. Support here, resistance here, support here, resistance there. Support here, resistance there. Support, resistance. So now one of two things is going to happen. Price is either going to go back up and challenge this area and challenge the BBC again, or buyers are going to back off looking for a better price, and we'll come down and see if this is going to hold again as good support. A couple of key areas on the chart right here where we had this bullish cross. Now we've already spiked that area. It doesn't change the fact that it is an important price in an important area. Okay, and so we're kind of just right in that area right now. By the way, today's only Wednesday, but for reasons I don't need to go into, I decided to go ahead and update the weekly trading zones a day early. Now, all partners and passport holders receive the weekly trading zones every Monday morning, 6:15 a.m. Eastern. We've been publishing the zones since December 14th of 2009, so we're coming up on our 10-year anniversary of the weekly trading zones. I typically share those numbers with the entire CFRN community on Thursdays, but I did it a day early, and yes, you're very welcome. Now, I had a mentoring session yesterday, and the person that I was in the session with, we went over a number of different things. We looked at, some logic, 247 alerts. This particular trader had decided that he would focus his efforts for now. He's doing a great job. He's a very methodical kind of guy. I really like him. You're all nice people. There's nobody. I guess I wouldn't say it on the radio if it was true, but we don't have a single partner or passport holder that I don't enjoy spending time with in the sessions. That's just one of the benefits of the job, I guess. I get to meet and spend time with really nice people who are kind and courteous and thankful for the help. So that's a good thing. Now, towards the end of the conversation, he said to me, I think I see what part of my problem has been. I said, okay, what is that? He said, I haven't been putting those zones on my chart. I had to grab my little oxygen canister. Hey, did you know you can buy oxygen in a can? It was on Shark Tank the other night. But that's a story for another day. He said, I mean, I know the zones. I've been around a while, and I know that they're important. He says, but I'm just trying to wrap my mind around everything, and I thought, maybe that was one thing I could just get away with, not having to deal with right now while I'm trying to just figure out the indicators. And of course, I told him, I'm so glad that you mentioned that, because you must put the zones on the chart, because that provides the framework for each market that I do the zones for the entire week. Now, you've heard us say a million times that there is no holy grail in trading. However, if there was a holy grail, it would be the weekly trading zones. They just provide a beautiful framework. Think of it as a playing field. You're at the football game, you're at the 50-yard line, sitting up in the bleachers. Look to the left, you got the 40, the 30, the end zone. And look to the right, you got the 40, the 30, the end zone. It's the playing field, right? The gridiron. Most weeks, all trading activity stays on the playing field. Every now and then we have a week come along where we'll blow out the highest weekly zone, or crash through the lowest weekly zone. But for the most part, we do stay on the field. And the benefit they give you is it helps you understand at any given time what price is currently trying to do, what the market is trying to do. Because we know that the market always wins, right? The market's always right. So if we can find a way to just do what the market's doing, I don't even have to finish that sentence, do I? And the gentleman I was working with yesterday afternoon, he said, well, you know, I just been trying to focus on the indicators and kind of get that down, and I didn't want to, you know, confuse the issue. And I said, well, that's great thinking, but when you put the indicators on with the zones on the chart, it actually gives you a clearer picture of exactly what the market or price is trying to do right here, right now, in this moment in time. Looking at this chart, we're sitting right on top of a weekly zone. And again, every chart's got this week's zones on it. 2916/17. We've been consolidating in this area for 1, 2, 3, 4, 5, 6, 7.5 hours, I guess it is. This morning, I think it wasn't a scheduled economic report, but I think some commentary, something came out that gave a positive nod to this whole China business, trying to work out some kind of a trade agreement. And so, you know, buyers swarmed the market and were able to run it up pretty nicely. Over the course of an hour, we went from 2906 up to 2933. It's about 27 S&P points. So that's a nice move. Now, interestingly enough, when the buyers came and swarmed and ran it, look where they ran it to. Today's Wednesday. All of our traders had this information Monday morning. Not only did it run to the zone where it was rejected, look where it came right back to. And consolidated. Now we've got a little bit of what I call wide-ranging consolidation here because of the size of the candles. You know, you can only fit so much candle inside of one of these little zones, like 16/17. So we're above it, we're below it, and then we get above it. Can you tell right now which zone price is trying to get to? Now remember, we can't tell the future. We're not fortune tellers or soothsayers. No one is. No man, machine, beast, algorithm, oscillator, indicator. God, in his infinite wisdom, did not give mankind the ability to change the past or know the future. And those two are inextricably linked for eternity. So I know what you're thinking. Well, yeah, but I was just on a website earlier today, and they definitely said they can tell the future. Well, sometimes people fib, and I'm not talking Fibonacci, okay? It defies the laws of physics. More importantly, it defies the laws of God. Because what he carves in stone stays carved in stone. So we're consolidating. The market is making up its mind. The market is taking an inventory of buyers and sellers. Because order flow is what will dictate whether or not we go to this zone or this zone. Now, in the world of trading, there are very few absolutes, okay? But I absolutely promise you, by the time you and I have this similar conversation this time tomorrow, price will have found its way to this zone or to this zone. Now, to add a little bit of clarity to the picture, it's pretty clear there, but all we know at this point is we're consolidating. The market's making up its mind, so we can't do anything We have to wait for the market to make up its mind because we want to do what the market does. Okay. So if I throw up the CFRN indicators, where's price in relation to the BBC? Remember what I said just a minute ago on the daily chart? When price is below the BBC, we anticipate lower prices. When price is above the BBC, we anticipate higher prices. So now we have additional clarity. It's like those special glasses you've seen on TV, the blue blockers or something. You know, now it all comes into focus quite nicely. Am I saying that a person could just get long right here and see if in fact price can make it up to the zone overhead? That's an option, sure is. You could also drill down to your range chart that Michael trained you on, and you could find that long, here, let's just look. Just take 1 second, then we'll go to Michael. Let me hurry this up. Okay, put this on a 4-tick range. Okay, let me shift it to the ES. Well, Michael said if I bang my mouse, it would make it not do that. But
no, it makes it go down. Makes price go down. You gotta bang your mouse. Everybody's gonna do it together. Here, you ready?
Boy. I just wanted to stop going around in circles. Remember the other day I said I was itching for a new computer? That might have just been my spidey senses saying, dude, it's not about want. It may just be, the need may be upon you. So, I don't know. I was looking at Craigslist last night, boy. I saw some beauties. Okay, come on. Catch up. I got 32 gigs of RAM in this thing. I got an i7 chip. I did a speed test at 200 megs. I mean, so I'm fine under the hood, but apparently something else has got under the hood. It's causing me some grief. Oh, please. All right. Take it slow, Dwayne. Take it slow. No way. Come on. One more. This is ridiculous. Thumper, is that you? Thumper. Remember back when we first got the internet, and it was in the AOL days. Everybody had a handle, like they were on the CB radio or something. Okay, well, you gotta love it when that happens. No way. No way.
What?
I just crashed the platform after I put all the new zones up.
Oh.
Oh, say it ain't so, Joe. All right, guys. Well, that's now. Okay, let's turn this into a teachable moment. Whenever you do something to your charts, make some changes, put your zones on for the week. Michael will show you here in a minute how you save your workspaces so you're not banging your head against the wall. So if you guys hear this banging noise while Michael's doing the recaps, don't worry, I'll be fine. I have a helmet I wear when I do that. So, all right, well, it happened, so I don't have any choice but to deal with it. Okay, let me just give you guys the numbers real quick, and then I'll get out of the way here for a few minutes. These are cash markets around the world. In the U.S., the Dow's currently up 196 points. NASDAQ is up 84. S&P 500 is up 26. And the Russell 2000 is up 7. Now for the NASDAQ, that's a gain of over 1%. S&P 500, almost 1%. In the commodity basket, crude oil up 87 cents, trading 53.50 last. That's a gain of over 1.5%. We did have inventory numbers today. Now, if I remember correctly, Michael, you told me there was a build.
Yeah, there was.
So yep. Price, in theory, should have gone down, right?
It should have, right?
Should have. Yeah. Well, there you go.
Logic.
This is why we don't trade.
Make it go down.
Yeah, this is why we don't trade news. Or I don't. Yeah. Gold up $7.90, trading 1511.80 last. In the Asian markets at the close, Nikkei was down 131 points. The Shanghai was up 11, and the Hang Seng was down 210, and that's almost 1%. And in the European markets at the close, FTSE up 23, DAX up 124, and the CAC up 42. And the DAX would be the mover and shaker in that bunch, up a little over 1%. That gives us a mixed day in Asia, green day in the UK. So far, it is a big green radio Wednesday here in the US of A. Let's go to Michael, get that recap. I'll be back. We'll talk to John. We'll look at the Concierge Trade Alerts. We'll look at the Logic 247. I'll answer all your questions. And hopefully we'll get a chance to see Mr. Thumper's trading strategy. All right, brother. It's all yours.
It's never gonna happen.
I cracked myself up. Oh,
the Bashers don't have a clue.
No.
Anyway.
It's a long. It's got to be a lonely life out there trolling the internet. You know, trying to find somebody's day you can throw a monkey wrench in.
And for no reason at all.
For no reason. Yeah, I mean, wow. Yeah, that's it. It makes me sad. It really does. Okay, I'll be back in a bit.
Those are toxic people.
Toxic. There you go. What a great term. What a great term. Yeah.
Toxic. And I just cut a couple of them out of my life about 6 months ago, and my life has been so much better without it.
You made it. You knew someone was having a negative impact on your life, so you just changed that dynamic. I don't know if you had a chance to read the post I put up the other day, but Jim Rohn, a motivational speaker, one of his big ideas, something he talks about and speaks on around the world, is that you will become the average of the 5 people you spend the most time around. I think there is a lot of truth in that. I know that, sometimes if you get around someone who is a real strong A-type personality, kind of domineering, but they're nice, so you still hang out with them. It's not too long, especially if you add a little alcohol, before you might start affecting some of their mannerisms or using some of the terms that they use. You're not consciously doing it. You're not trying to mimic them. It's just part of the human condition. So the purpose of my post the other day was that, okay, if what Jim teaches is actually true, if we do become the average of the 5 or the 7 or the 10 or whatever the number really is, if that's true, well, life just throws people at you. You don't get to pick your family. I guess you do get to pick your friends to a degree, but you don't get to pick your coworkers. You don't get to pick who sits on the other end of the pew. Life just throws these people at you. But what if what Jim teaches is true, what if you intentionally set out to surround yourself with only people who are successful, love Jesus, people that are going to have a positive impact on your life, instead of the ones that are going to drag you down. In that article, I also quoted a Harvard psychologist who, based on all of their study, says that our success and failure in life is 95% based on who we spend the most time with. All right, it's all yours.
All right. Well, then I'm glad I cut them out. Yeah, we had a lot of good times, but it had to be done. All right, here we go. Good afternoon, everyone. Today is Wednesday, the 9th day of 2019. You know what? We're going to have... Yeah, never mind. Today is Wednesday, the 9th day of October, 2019. Today... And I didn't bring that up yet. If you have not taken a free trial with us, go to the homepage at CFRN.net. Over here in the right-hand column, it says 5-day free trial. Apply.CFRN.net. If you click on that, you'll be brought to this page, eminitrainingschool.com. Now, you can go directly to this page, I think. But if you click on that page, you will be brought here. And all we ask for is your name, your email, and your phone number. Hit register now. Once you hit register now, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So you got to do that. All right. All right. Results. Everybody wants results. If you're going to read the spreadsheet, you go to all the CFTC risk disclosures down at the bottom. Today, as I said, is the 9th day of October 2019. Today, I made 8 ticks on crude, and that was it. We had, you know, with Powell speaking and all the other things going on today, it was a little bit back and forth, but we ended up positive. We did go negative at one point today. I'll get into that in a minute, but we came back, ended up positive, plus 8 ticks on crude. It took 23 minutes and 2 trades to get to the goal for the day today. At that point, we're up $100 a contract, and we took a total of 8 trades. On the month now, we're up $742. That's over 7 days, averaging $106 per day. On the year, we're at $29,173. That's over 182 days, averaging $160 per day. That is one contract, 2 hours per day. One contract, 2 hours per day. Okay. All right. Let's show you what happened or didn't happen, because today was just a really messed up trading day. In gold, we had this one break-even trade right here. Then we didn't have anything else set up. We didn't have anything else set up. If we were trending, we would have had a short trade here, but we weren't. And let's see, during the break, did anything happen? Yeah, there was no, we weren't trending. I suppose you could say we had higher lows and lower lows. I mean, lower highs and lower lows. So we might have had to trade off the BBC right here for this move, but that would be it. So it was, you know, a real messy day. I mean, look at the euro. From right here to right here, there is nothing but range. And it's trying to set up a trade right now, but any entry would have to be above the MA1 because we have dynamic support printing right here. Okay, so we had nothing on the euro today. Now crude had some pretty good movement today. Well, of course, the crude inventories came out. You know, this is where we got our goal for the day, was right here on crude. We picked up 10 ticks on that. And even though I did it in the Z contract, Microsoft rebooted my computer last night. And when I opened my DOMs up, I didn't realize I was on the Z contract, but I still traded it from here to here. Anyway, we had a break even there. Then we stopped out there, putting us at -2. No, -2, sorry. I took a little stop out here. This was a 4-tick stop out because it was right before crude inventories and I was long. I could have waited a couple of minutes and taken a break even right there, but I just wanted to get on with it. And then the crude inventories came out and the market jumped around a bit. Then we actually did stop out here, and that put us at -2. All right, then right here, we picked up 3 ticks to put us at +1. Then we picked up 5 ticks to put us at +6. Then we picked up 2 ticks to put us at +8. And then we get into the break. And let's see, during the break right here, we weren't really trending, so I wouldn't have done it. But there was a bounce off the BBC with the cycle being red and below the green line right there. Then we finally put in a lower low over here, came back, tried to switch directions, and it's doing it again. There was just a short right here from 53.30. Now, my number for this week for crude to get to is 52.30. And this morning, I had suggested the 52.5 options. At the time, they were pretty much right where they are now. They did go up to $840, I think, at one point today. But we'll wait and see how they do. All right, and that was Crude. The ES, I didn't do anything with the ES today. Let's scroll back and see if there was anything to be done. Okay. There was nothing here. See, we had these big moves, but then we just got sideways, went up into the zone, came back off the zone, came down, and in here is when Powell started speaking today. Okay, and then went back up to the zone, still not given any trade setups, and then it just went sideways. It was a rough day trading the ES today. No, on the 4-tick range. Okay, now if we were to flip to something else, yeah, it's a rough day anyway. No matter what you were trading, it was a rough day. Let me look at the 30-minute. Yeah. Okay, well, anyway, that was our day today. The markets were just really messy. I was hoping for something better, but we didn't get it. We did get the goal for the day, however. Now, again, if you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today is the 9th day of October, 2019. It's Wednesday. Today we made 8 ticks in Crude, and that was it. It took us 23 minutes and 2 trades today to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 8 trades this morning. So on the month now, we're up $742. That's over 7 days, averaging $106 per day. And on the year, we're at $29,173. That's over 182 days, averaging $160 per day. Now, I know 29,000 at this point in the year does not seem like a large number. That's one contract, 2 hours per day. Now, if you had added one contract per month, then it would be $173,000. Well, one contract per month and did everything exactly as I did. It'd be $173,000. And that's 2 hours per day. So that's pretty good money for a 2-hour day. All right. Oh, I didn't mean to put that away. If you have not taken a free trial with us and you want to take a free trial with us, go to the home page at CFRN.net, and there are several places you can click. You can click there, you can click there, you can click here, or even way down here. I think they all work now. Let's see. Yep. That one should be good. See, I'm looking down here in the corner to see what URL comes up. That one would be good. That one would be good. That one would be good. And that one would be good. So there's plenty of places you can click, and they're all going to bring you here. Okay, and on this page, all we ask for is your name, your email, and your phone number. Hit register now. Once you hit register now, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So you got to click that link for us. Okay, all right. And with that, I can pass it back out to fabulous Phoenix, Arizona. Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Kirby, we still got to have that phone call. Kirby, Kevin, and Luigi. Luigi, we didn't part in this meeting. Kevin, I think, worked it out with Bert. And so it's just Kirby left on my list. All right. So Dwayne will be back momentarily while we wait for him. I would tell you that this cycle is going up way too steep to consider a short trade. And over here on the ES, that is just nasty. I don't know why it's so bad. Well, we have FOMC minutes coming out in an hour. That's probably why. Yeah. That's okay. That's okay. I'm not even wearing my watch right now. Yeah, I'm sure it's a real one. Yeah, yeah. And a Rolex. Yeah, I don't know. The first piece of jewelry I got for Jada was a watch. Let me think about it. It was. It is. It is. I still wear my watch all the time. I'm just used to wearing it, and that was something Jada got for me. So it's sentimental value. That is. Oh yeah, I have a pocket watch. Today it took 23 minutes and 2 trades to get to $100 per contract. 2 trades, $100 per contract. people either. I thought you were doing that while I was going. All right. Well, you can see the ES dropped down into the weekly trading zone. That's over here. It dropped down. Oh, I thought I still had him. Oh no, you took him back. Okay. Well, I was just gonna talk about stuff while you're bringing up your charts. Okay. Well, then you can keep them. But I'll just tell everybody, the ES did drop down into a weekly trading zone, and that short trade that I had identified on Crude just a few minutes ago had a pretty good run. It's still going down. Crude is still going down. If you look at the larger time frame, you would see it's still dropping. That is the 4-tick range. I'm just looking at the larger time frame right now. We just closed down below the BBC. Now, if the current bar stays below the BBC and closes below the BBC, then I think we're definitely going to be moving down. So those options that I had identified to you, the 52 half options, right now they're at 800. And when I identified them earlier, they were at 770. I think we're going to get down to, what was my number? 5230 was my number. And there happens to be a weekly trading zone down there. And that was, that just lines right up with what I normally do during the week. So I'm thinking that the 52 half puts right now, the October 17th 52 half puts, today they have a total volume of 817, but they have an open interest of 2,904. I think that that's something you can get into and we'll be able to get out of profitably by the end of the week. Well, you're getting the opportunity to, if you put on a 52 half put, you're getting the opportunity to buy back. Well, it's, yeah, kind of. You're getting the opportunity. What you're buying is the opportunity. It's a put, so you're buying the opportunity to sell it at a lower price. Okay, and if it drops down below that price would be the strike price. I was saying 52 half, that's the strike price. If it drops down below 52 half, then the opportunity to sell it is gonna increase in price. As price approaches 52 half, it's going to be going, the value of the put is going to be going up. Now, when you buy an option, because I don't recommend selling options unless you have unlimited money, because there's unlimited risk when you sell an option. But when you buy an option, there's a time value associated with it, the strike price associated with it. And those are really important points. Now, other things that you have to look at is the volume and the open interest, because some puts, some people like to buy puts that are way out of the money. Now, out of the money means it's a long way away from the strike price.
Okay.
Like right now, you could buy 47 puts for $60. But there's only 293 total volume. It's actually got a lot of open interest, but
now,
if you
that term open interest, can you explain what that means?
Yeah, open interest means the number of people who already own that put.
Okay.
Okay, that particular put. well, it's not the number of people, it's the number of puts that are owned.
Okay.
To say the number of people would be, because it could be 5 people that own all 20, whatever the number is. But it's the number of puts that are owned and or sold. I say sold. It gets confusing because they're actually bought. You bought the put. Okay. You didn't sell the put. Somebody else sold the put. But that's the number that's out there with open interest.
Now,
And
okay, go ahead. Finish your thought.
well, I was just going to say, the one that I recommended, the 52.5, is 2,904 for open interest. So that means it's fairly liquid.
Okay.
And today's total volume 817. That's quite a bit for a put. I mean, the next one up, the 52s had 1,650, but the one after that had 225. So, the money area for me usually is the second out of the money. Is usually the best price to put. There are so many things that go into price inputs and calls, and there's the delta, the gamma, the vega, the theta, all that stuff. And I just try to simplify everything and just look at the best price put within. It's usually going to be within 3 of the strike price. And and then you look at the open interest in the volume, and make a decision. Now today, when I recommended it this morning, it was at 770. It's up to 800 right now.
Now, when you say 770, so for $770, what would a person have got?
You would have gotten 1 put option, is what you would have gotten.
And does that represent a certain number of contracts?
Well, we're talking about crude oil, so it represents a certain number of barrels.
Okay, all right.
and yeah, that's exactly right. And that number just changed to $930. So it was 770 this morning, about 4 hours ago, and now it's 930. And I think they're seeing what I was seeing right now, or people are starting to see what I was seeing. And yeah, $930. Somebody just paid above the ask to get in. Okay, well, John's out there. I can just bring John on too. Okay. Hey, John. John. Okay. Well, I know he's out there. And I just opened up his mic. And let me bring the options chain back up. And let me take the charts, since Dwayne just had something come up that he's going to deal with. Okay. So you see what I'm talking about right here? $930 right now. It was $770 this morning when I recommended it. And if you look at the Greeks, 52.5 is what I had recommended, and they're all suggesting that it's going to keep going. Yeah, and they're bouncing around, but let me shut those off so I can focus back here. $930. What percentage that is? 770. So it's $170 difference. Let me just do a little math here. And 170 divided by 770. 22% increase since this morning. And I really think, looking at crude right here, that bar closed below the BBC. If this one closes below the BBC, I think we're going to get the MA1 to cross below the BBC, and then I think we're going to start going down. And so my 52.30, it could get down there today, honestly. It could get down there today. And, good or bad, as long as we get the trade setups. That's all that really matters. Yeah, look at that move. So that one that I recommended, or the one that I showed you earlier, from right here at 53.30, ran all the way down to 52.85. It's not rocket science, guys. Got the indicators. Show you the trade setups. All you gotta do is pull the trigger. I know that's hard for people sometimes. And that's why we have one-on-one mentoring sessions. Coax you through that. And get the trigger pulled. Does anybody have any questions? John, are you there? Says you there. And your mic's open, but I can't hear you. Okay. All right. All right. Well, right now, gold is making a little bit of a run up right here. We just had a 10-year bond auction. Let's see what happened to the prices. Hold on. Let's see. Here it is. All right.
Hello.
Hey, John.
Hi there. Are you still doing your thing or what?
Yeah. Well, no, I'm done. No.
Okay.
Dwayne had something come up and he had to.
Is he coming on
for a minute? He's not on right now. He'll be back.
Okay.
He'll be back.
Listen, the market just took a little bit of a turn down here. It's actually acted pretty well considering it got clocked a little bit yesterday afternoon. I would say this market hasn't kind of decided whether it's going to go up or down yet, frankly. And it's one of just like we were saying yesterday, it's or Monday, it's a kind of a difficult market to figure out right now because it's unclear whether we're going to suddenly, obviously if we break out sharply to the upside, it definitely would open the way to going higher, possibly even the new highs in the next few weeks, given that they're going to actually sit down and start talking about this China deal. There's also looks like the Brexit thing. They might reach a compromise here. You've seen this before. There's like negative and the sort of no hope for a deal, and then all of a sudden, out of nowhere, a deal emerges. I think that's a distinct possibility, and that actually could help. That could actually lift the markets quite a bit. So, as far as the metals are concerned, I think you'll have to agree that they're acting pretty well. And they look poised for what looks to be a pretty dramatic upside breakout. The platinum's been creeping up in the last few days from a pretty dismal kind of a level, and the palladium is virtually at an all-time high, and the copper hasn't been too bad either. So the metal sector in general honestly looks pretty positive. And potentially very positive if we start, breaking out above 1520, 1530, 1525 or 30 on the gold, and $18 on the silver. The next push, honestly, could put the silver into the 20s. And I think if the silver goes in the 20s, we're going to go to 24, 25. And if the gold breaks above the previous high, you can honestly see a couple of $100 to the upside. So that's the way it looks to me right now. Definitely looks very constructive. And even with the strength in the dollar, right now the European currencies again are looking a bit dismal. after a rally in the last few weeks. The dollar seems to be, it's pretty hard to hold this dollar down at the moment. So, and you know, in spite of Trump's some of his things that he's been doing, you gotta, you know, he's done an incredible job with the U.S. dollar, really, in terms of it's, you know, it's certainly a measure of wealth of the U.S. economy, and in terms of the trillions, tens of you know, 10 to 15 trillion being created in net wealth at a very high dollar rate, certainly is a very big deal in global terms. And it's not entirely certain that we're going to see a lower dollar, you know, in the next month or two, unless possibly after the Brexit something drastic changes. So you know, obviously if the dollar drops a couple of points, that would change everything, but we haven't seen that yet. So every single dip in the dollar pretty much this year has been bought and has ended up going higher. And the structure of the dollar at the moment lends itself to higher than lower kind of prices. I wouldn't rule out a retest of the 2016 high at 103, but I think 103 might cap it. But you can, you know, listen, if gold and the dollar go up together, what's not to like, you know?
Yeah.
The only thing is that at some point it's going to strangle the world economy, and it makes, you know, the U.S. kind of prices itself out of the market a bit, and that is a bit of a risk.
Yeah, when excuse me, when the gold and the dollar go up at the same time, I mean, normally that's like the euro and the gold going up at the same time, you know.
Well, no, the euro and the Swiss in particular, when the Swiss, I mean, if the Swiss suddenly jumped 10%, you'd see gold jump 10%. And that day may be coming, you know, there may be a will, you know, look at, maybe it's the Fed is going to do something that will break the dollar. The dollar break could happen anytime. And when it happens, I mean, if we do get a break in the dollar in 2020 or in the last month or two of this year, it's probably going to be a very, very, very positive for the U.S. It's you know, for the U.S. economy, and will generate a bit of inflation, and that will add to the growth. So you might see the growth actually improve next year, possibly back to 3%, maybe even 4%. You know, I mean, if the lower the dollar, the higher the growth rate is probably what's going to happen. And whether the powers that be have figured this out yet remains to be seen. But as it seems to be logical, you know, look, if the rest of the world, you don't, you know, if you just look at the EEM chart and go back and look at 2001 when the dollar started to weaken, the last cycle, you know, you had the most unbelievable boom in Brazil and Australia and China and all the emerging countries. And ever since the dollar got strong, that boom has come to a screeching halt, and has been, you know, most of the emerging countries have been pretty subdued over the last few years, while the U.S. has barreled higher and has been great. But right now, if the rest of the world sort of you know, was able to benefit from a dollar decline, it would lift, I think it would lift all boats, including the U.S. So, you know, as far as I'm concerned, it's kind of a no-brainer.
So what would you recommend?
You mean to do today?
Yeah, to do today.
the gold, you know, actually yesterday I did say when the gold pulled back to about 1504, it looked like it was going to reverse higher, and we got a beautiful buy shortly after I got off. And the silver also performed better, you know, improved yesterday. And today it's up 8 cents. The gold's up $8 from yesterday. And it just came down and tested 1507 pretty sharply and rebounded almost immediately. So given that has just happened, doesn't make it a guaranteed trade to the upside, but it's certainly the kind of trade that normally one would kind of take as a buy signal.
Yeah.
So, you know, I mean, the reason I'm a little bit squeamish about going too crazy long gold at the moment is because it, you know, we've, in spite of its improved performance, you've seen it drop down a few times. You know, even yesterday when I had a great rally and then pulled back, I didn't think that was, you know, probably constructive in terms of. I mean, it looks like gold is consolidating here at a level from which it could continue higher, and possibly accelerate higher. It really feels that way at the moment. And now that the market's coming off a little bit, I mean, something happened this morning. I don't know what the heck happened, but just a short while ago.
You're talking about that spike? It was from 5 a.m. to 6 a.m.? Yeah,
exactly. Yeah. So you know, if the market turns down from here like it did yesterday, I would say it's not so good, you know, and maybe very helpful to the gold and silver.
That would be a good thing. Now, crude oil right now, I had suggested this morning that crude within the next week is going to get down to 52.30. At the time, I suggested the 52.5 options, the October 17th 52.5 puts. At the time, they were $770. Now they're $1,030. That was that was this morning, and I think
what was that?
The 52.5 puts.
Oh, right.
October 17th 52.5 puts. I suggested buying them this morning at $770, and now they're at $1,030 each. You know, they got the open interest is good, the total volume is good, and I think crude is gonna. I had said 52.30 is where I expect crude to get to within the next week, and I think it's gonna do it. If the ES continues to drop, it will probably take crude with it. Crude usually goes with the ES. It doesn't always, of course, because there's so many things that affect crude. But they usually run together. And if the ES continues to drop, I think we're going to see that 52.30 number sooner rather than later.
Yeah. The gold stocks are off a bit today again, too, which is they're starting to pick up off the lows. You know, sometimes these gold stocks are very difficult to trade.
Want me to grab the charts, Michael?
Yeah, sure.
And I'll pull up some of these. Which one do you want to look at, John?
Okay. Yeah, because.
Probably the JNUG, just to.
JNUG, okay. There it is.
We don't see it yet.
Oh, one more click. There we go. That should do it. Okay.
There we go.
Yeah, you see what I mean there? The way that's not a very constructive kind of
a pretty symmetrical descending price channel there.
Yeah. So, you know, that's why I'm a little bit, like I say, I'm a little bit squeamish about getting too bullish on the gold just yet. However, if you know, this thing gapped up tomorrow or something like that, it could change everything. So but you know, maybe Newmont, maybe take another look at Newmont, NEM.
Okay. There we go.
See, Newmont looks a little more bullish.
Yeah, that's a much better.
But with the doji there, you know, next thing you know, you could be looking at a lower price tomorrow in the Newmont. So it's very tricky right now. And we may be, and look with that possible island bottom. I mean, if Newmont did gap up to 40 tomorrow, you'd probably want to be long, you know, 39.40. So, and that we may be confronted with something like that. You know, because right now the gold is actually acting pretty good. Maybe we can put up the gold, Dwayne, and see how it looks.
Absolutely. There it is on a daily.
I mean, it looks good, doesn't it?
Yeah, it's still pushing up against that little trend line I drew there yesterday. Got to get on the other side of that thing.
Sure. And the silver, I think, also is looking quite well.
It's not moving higher, but it's not breaking down. That's the first step.
Yeah. Like I say, you know, it could change if gold suddenly drops $4 or $5, it change everything. So that's why you have to be a little bit careful right now. I mean, it's kind of amazing the way the market, after such a bad close yesterday, it's actually up today as much as it is. However, you know, if we do sell off this afternoon, remember it's a Wednesday, so if we were to have a bad Thursday or Friday in this market, it could potentially set things up.
And we've got Fed minutes coming up here. What time is it, Michael? At 2?
2 o'clock.
Yeah, that could change everything. That could change the gold and silver story as well. So we'll have to see how things unfold. So
if you invested $1,000 in Google 10 years ago, how much would you have now? Anybody want to take a guess?
You'd have about $1,200. Sorry, 12,000. 12,000.
Okay. On September 27th, Google turned 21. The tech giant has a lot to celebrate, blah, blah. Google's success since going public has turned out to be a positive for shareholders. A $1,000 investment in 2009 would be worth more than $4,800 as of October 2nd. And, you know, honestly, I thought it would have been a much bigger number. That's still a return of 400%.
I don't think Google's ever split or anything.
I don't think so.
No, I think it's more like 12,000.
Well, I'm quoting this from some article here on it just popped up on CNBC.com. It's a CNBC article. So, come on. $1,000 investment, 2009. Oh, 2009. I was thinking 1999. Okay, there's why. Okay, so 4,800, 400% return. You can't argue with that. In the same time frame, by comparison, the S&P 500 earned a total return of just more than 250%. The company, which went public in 2004, has a current share price around.
I thought Google went public at about $100 a share.
Well, let's look. Let me bring up the chart, and we'll find out. All right, go to monthly. Okay.
Yeah.
You know what? It's only taking me back to when Google became ABC.
For some reason, I'm only seeing that. Oh, you know why? That's when they changed the.
Right.
So look.
I wonder if there's any way to see that previous history. Alphabet Incorporated. No, I guess.
Unless you get, they get a 2-for-1 when they
look
did
at there, John. I found it with these Class A shares. It's taking me back. Well, even that. So 2005. Does that sound about right for when they went public?
Yeah.
Okay, and that price was
100. Was about 100.
Yeah.
I was right, about 12,000 bucks.
Yeah.
So. Yeah, the fellow who put in the first 100 grand. I think that's worth 100 billion right now, something like that.
They went to Yahoo for funding. I think they were trying to get
the
100 grand.
very first time when they were in the garage,
they
were running out of money, and they got 100,000 from.
Oh, did Yahoo give them the money? I thought I remembered them.
No. Before Yahoo. Okay. This was the very first investor in Google, and I think he got about a third of the company, maybe 10% or something. But I think if it's 10%, obviously it's worth 100 billion today. So.
And what about that guy that sold his Apple shares?
One of the greatest investments of all time.
You know the story of the guy that, along with Steve Jobs and Wozniak, there was a third guy, and he sold his shares just like right away, and I forget what the number was, but he got practically nothing. He could have been a billionaire. He lives in a trailer now. There's a thing on the internet out there about. I feel sorry for the guy.
Yeah. You know, when you look at that chart, Dwayne, and you'd have to say there's a pretty good chance that Google's going to break out to the upside and probably go up to about 1,500.
Yeah, I can't argue
Maybe
with that.
even 1,700.
Cannot argue. We've been channeling sideways here for.
Well, remember, I had a big upside surprise recently on the earnings, so
About a year and a half.
I think that the penny hasn't dropped yet on this quantum supremacy. I think that's a hidden value for Google that's almost incalculable at the moment. And one of these days it's gonna kick in. Also, you might let's have a look at Facebook and see how the Facebook looks today compared to.
Okay.
I think Facebook looks potentially very bullish given.
All right, here's Facebook on a monthly, going back to.
Yeah, those spikes are a bit of a problem, but you know, if Facebook starts going back up towards 200, I think it's going to have a whole new up leg. And you know, Facebook's got like a money printing machine, and maybe if they get this Libra going in the new year, that could be a very considerable benefit to the company. Because, you know, they're not through monetizing Google in any way, shape, or form at the moment. Let's check out Twitter.
Okay.
Yeah, same. It's you know, that's not very good charts actually, those two. What about Amazon? Let's have a look at Amazon. See, Amazon looks like it could take a move up from here.
Now, who are some of the big names back in the .com days? Oracle. Oracle was around back then, right?
Yeah, Oracle is a contender. It's actually acting pretty well.
About Intel, they were around.
Intel, I think, is going to go to a new high before this whole thing is over. I'm just.
Does Yahoo even trade anymore?
I'm going. By the way, I'm going for the i9, the maximum chip, fastest chip.
What are you doing now? Tell me.
I might have it in a week or two.
Oh, you're getting an i9 chip?
Yeah, because the system can't handle it. It's crazy right now.
How much RAM are you running?
64.
Wow, I have 32. So i9. Okay, here's Intel's Workstation X series. Which one of these are you getting?
It's the 98 i9.
Is it the 18 core?
No, 36. 36. I think it's 1632 or something like that, or maybe 1836.
Okay, we'll just go straight to the source. Intel Core i9. Okay, tell me now again that number you were just
Keep
saying?
Keep going. That's the one, I think. That one.
This one?
That's the one.
This one right here?
No, more. No.
That's all of them.
No, it goes. I think it's just keep going down.
It took me to the bottom of the page.
99. It's the 9980.
Okay, 99. There's 9980. Okay, there's this 90. No, that's 9880. Here's 9980 right here. How much is this going to set you back?
A lot.
I'm sure it'll tell us, give us some kind of price here on this thing. Maybe not. Okay, well, something that caught my eye back on this other page, up at the top. Something was 10 grand. What is this? Xeon Inside. This isn't a $10,000 chip, is it?
It could be.
Really? think I'll be looking for a new computer here pretty quick. Gen 9 Xeon E5. Yeah, it's originally 15 grand. They've got it marked. They rolled it back to 10,396. Honestly, I did not know there was a chip available to civilians like us that cost that kind of money.
I didn't either. But I've got a lot of Xeon computers, but not at that price. I got them pretty cheap, actually. So.
Price of RAM has really come down. RAM used to be pretty expensive, but now you can. Well, here's a Xeon processor for $4 grand, 3,500.
Just shows you there's so much demand for speed and power.
Yeah.
From big companies, you know.
Wow. Okay, what else you want to look at?
No, I think we're pretty much covered it. Just one sec. I think I have something here. Just get the exact name of this one. It's i9-9980X is the actual one.
All right, let me bring that up.
1836. It's 1836 core, 4.5 gigas.
Okay, give me those numbers again.
i9-9980X Extreme Series processor.
Extreme Edition processor. That one right there.
Hold on. Pull you up just a second. That's the one here that looks
Extreme Edition, $1,700.
It's come down a bit. So it was 2,000. So
wow. Now, I mean, I don't know what kind of a benchmark to use for this.
Hold on a second.
I mean, I can download a 2-hour movie.
Yeah, it says X. I don't know whether it's XE or X. It says the X on mine, but it does say Extreme Series. So, but listen, it's not a matter. It's not by. I'm not. It's just. It's a need thing. It's just the system can't handle anything less. The i7's not cutting it, you know. And it's very frustrating.
The amazing thing to me, I was just looking around the other day. There's still a lot of computers out there being sold with the i3 chip, the i5. But I guess they're getting phased out. They're getting phased out. I mean, look, eventually this i9 is going to be the standard. I think that's where the world is going. Well, most people use their computer to do Facebook and send email and buy stuff off Amazon, or maybe watch movies. The applications that we use are so intensive and require all of this horsepower. But most folks will never. This would just be complete overkill for the average person.
Why don't you check out AMD Threadripper, see what price that one is? Because I haven't made the decision on it yet, so it's possible we might go with this one.
AMD Threadripper. All right, here.
Ryzen Threadripper. See, it's about the same price.
32 core.
That's 3264.
Mm-hmm. 1,800.
But according to some people, the Intel is better. But
now, this is a water-cooled. It's just always seemed odd to me. It's like warm beer. I mean, putting water in a computer just doesn't seem like a real good idea. But they do it. Video editing workstation. Powered by the latest AMD CPUs, NVIDIA GPUs, and whisper quiet liquid cooling. So you don't have any fans blowing. So when you're doing audio and editing and things like that. $3,200.
Wow.
Liquid cooling. If you want 32 gigs of RAM, you got to add $129. It looks like If there's 64, there's 128. What kind of... Oh, so you're just getting the chip. You're not getting a new box.
No, I'm getting the whole thing.
Oh, you are? Okay.
Yeah.
Huh.
Yeah. With 12 screen capability.
What video cards do you run?
It's a display port. The mini display ports. There's 4 of them.
Okay.
Sorry, 3 of them. Sorry.
I'm smitten with this thing, the Bison X5000. I may be looking for a new box, but I'm not
Like
looking to spend
there's four what you call it, plugs, 4 plugs in each one.
Oh, I clicked 32 core, and look what happened to the price.
Wow. Jesus.
Now I'm going to go with this custom liquid cooling. All right, we just bumped it to 10 grand. Let's run 64 gigs of RAM. Oh, let's make it 128. Building a dream machine. We're almost at 12 grand. And a good power supply. We're at 12 grand. Bison Z-Stack Ubuntu. Yeah, I don't think I messed with that. Graphics card. NVIDIA. There's a $3,000 video card. Honestly, I didn't. There's a $6,000 video card. I honestly didn't know. That's how much I know. Wow, crazy. Okie doke. Anything else, John?
No, listen. Thanks very much.
Hey, thank you.
The idea what I'm doing is I'm putting the top, replacing the current with this new one, and then the one that's doing everything else. I've got a need for an additional 8 screens for something else, so that's perfect for that machine to slot into the other one. And then the one that's at death's door, which by the way is a dual Xeon computer. It's just like
Is that the one I sent you?
No, it isn't. No, that's going great. That one.
That
Thanks.
one isn't.
Yeah, that's going great. But the one, I got a really good deal on 6 Xeons, 6 dual Xeons, maybe even quad Xeons a while back, and they're just all dying. They're dying, and it's just it's over. We gotta get. So just getting this one in and moving everything down brings me more or less within a year or two of the last, no more sort of 5 or 10-year-old computers. You've got to have the latest.
Right.
With the internet and everything, if you're not using the latest stuff, it just wears down the computer.
Yeah.
And so it's a sort of solution. Should see me through for a few years ahead.
Okay.
And you gotta, when you get to the stage where the machine is taking a long time to boot up, or it hangs, or it's just taking time to process stuff, it just wastes time, really.
Right.
So, well, in spite of that spike, it kind of looks like the minutes are probably going to be positive for the market. So, and then maybe that'll push the gold back down a little bit. So,
look at how many hours we've been consolidating here. Since we made that spike this morning on the 5:30 a.m. Eastern candle, we've just rolling sideways here, hugging this zone.
Yeah.
We should
By the way,
some kind of reaction.
I believe that that E-Trade and Emini Trade are offering almost no brokerage now, no fees.
Right. Is that on equities and futures and options?
Well, when we looked at the futures on the Schwab, it wasn't too bad. Like 150 per contract. That's pretty competitive. So, this is a big deal, because costs, if losses are part of the trading business, but if you're not, brokerage mounts up over time as well. So it could definitely mean the difference between, if you do a lot of trading, could be worth tens of thousands a year. You know?
Absolutely, yeah, absolutely. And it's going to, people will be trading more, which could lead to overtrading. So people have to be careful of that. But more and more people are going to get exposed to futures and
global. When I had my big winning streak, I mean, to be honest with you, the reason why it went as well as it did was because we had almost negligible rates at the time, because I was working with a floor broker, and he had super competitive, you know, rates. So that was a big factor in it, you know. So it's almost like when the brokerage doesn't really come, you know, when it's kind of a rounding error, psychologically it's a lot better, you know.
Mm-hmm. Right. No, I agree.
I mean, look, the main thing is, you know, what's the Warren Buffett rule? You know, limit losses or avoid losses. And rule number 2 is don't forget rule number 1.
Yeah, right.
And you know, there's a lot of, that's why the train leaving the station, you try and get on the trend as it's unfolding, is a lot better, is the best way to trade. Because if you're, or what you do, you know, using the stops, because a lot of times you put stops on and, you know, you might be asleep and you wake up, and if you're already well ahead on the stop, you know, the smart thing to do is put in a suitable stop so that you're not at risk. Right. You know what I mean? Mm-hmm. Or take the money, you know. I mean, even taking, it's like cricket, we've talked about this before, you know, cricket's one, it's not the 4s and 6s are great, but the 1s and 2s is what wins the game, you know. So trying to trade for a home run at every trade, it doesn't work that way. Every
trade starts as a scalp.
Yeah.
And if you manage it properly, some of them will grow into more than that.
Yeah.
Right,
I mean, actually, the biggest failing, I think, and I'm number one probably sinner, is you know, a lot of times when you get into a trade, you know, you might be making a great decision, but you have to, you know, the smartest thing you can do is to stay with the trade as long as the market, you know, keeps going. And a lot of times, I mean, when we were talking about gold back in the bottom in May, June, and look at where it is today, and you know, I think anybody would agree that I was very, very bullish on gold at that bottom, and I still am. So, you know, we hit our targets. Remember, our targets were 1550,
right,
and 1950 on the silver, and they both hit exactly. Which is, I think the silver went to 1960, and the silver and the gold went slightly higher. But you know, I did say at the time, when your target is hit, sometimes it's a good idea to take the money and step back. And you had the opportunity to buy gold back not so long ago, maybe about a week ago, at about 1465 or so, or 1470. So you know, that's imagine getting a reset at that price. That's and already being well ahead again, you know. So and you know, a lot of stocks that we called early on in this show, back in the 2000s, mm-hmm. for example, Apple, you know, a lot of stocks have gone up 50, 100-fold from where we originally highlighted them, and that's it's great. You know, if you go back to 2003, 4, you had people like Warren Buffett and some other smart, you know, well-known traders saying that they saw no hope for the future. At that time, they were pretty negative on the market in 2003, and that was the beginning of a mega move higher into 2007. So. Yeah, that's that is a really bullish looking chart. That gold.
Oh,
boy.
Gold. Let me bring up a clearer picture of it here.
Yeah. You know, it feels to me that something gigantic is coming for this stuff here. It's going to be gunning for that 1800, 1900 high before too long.
Yeah. Well, we'll see in 12 minutes from now if the Fed minutes are the fuel on the fire to get this thing moving.
Okay, so listen, thanks very much. Have a great afternoon.
Yeah, thank you so much.
Catch you tomorrow. Bye-bye.
All right, talk to you tomorrow. Okay, guys. Concierge Trade Alerts. We're behind schedule, but we're on top of it now. Let's go. If you want a screenshot, go ahead and grab it. Now, the Concierge Trade Alerts static report issued shortly after the Globex open each evening, Sunday through Thursday. These numbers are good for the entire session. Important prices, important areas are almost always tested. It's not unusual to see these trigger more than once during the session. But once the CTAs are published, then they are good until the next evening. Globex open, out comes the new report. The difference between the Concierge and the Logic 247, the Logic is based on current price behavior, not previous price behavior, and Logic operates in a 24/7 environment as opportunity presents itself. And when the Logic and the Concierge point at the same important price, important area, always deserves a second look. Okay, so on the S&P, now I did not get normally I get them out right after the Globex open, sometime between 6 p.m. and 9 p.m. Eastern. Last night they went out at 3:10 a.m. Eastern. Okay, had a little hiccup in my giddy up here. So consider being long 29.27. The trade to target is 29.33. Price is always trying to get to a weekly trading zone. From the moment the markets open Sunday night until they close Friday afternoon, price is always trying to get to a zone. And when you're able to discern which zone price is currently trying to get to, that makes your job as a trader a lot simpler. Okay, so entry 29.27, target 29.33. That's a 6-point move, $50 per point, $300 per contract traded. Go to the now, and I redid these zones. I rebuilt those. On the Dow, I'm just going to drag into the screen ones that are pertinent for today. 26, hang on, 350. Okay. I got to go to 26, 375. /80. And the zone below that, 26155. /160. There we go. Now, if price is always trying to get to a weekly trading zone, and it is, again, your job as the trader is discern which zone it's trying to get to. As we trade below this zone, to the naked eye, even without our indicators. Pretty clear to see that price is trying to get to the zone below. When price approaches the zone from above, we expect it to be good support till it isn't. And then when price rallies up to a zone, we expect it to be good resistance till it isn't. So we went from support to resistance, back to support, back to resistance. Made a run lower. Now, okay, so this move made it, this move made it, this move made it, this move made it. This one, it took a little double bottom going there. So with this double bottom or triple bottom, if you want to call it that, that gives bullish context to the market right now. So at this point, which zone is price trying to get to? This will help. Price is above the BBC. Below, above, below, above, below, above. As long as we stay above the BBC, price is still trying to get to that zone overhead. Last night, Concierge Trade Alert, considering a long 26,290. That's going to be right here. $26,290. All right. From 290 to the target at 375, that's 85 Dow points. Alexa, 85 times 5, please.
85 times 5 is 425.
All right. So from the entry to the target, $425 per contract traded. Important prices, important areas, almost always tested. So we get back below the trigger, off we go again. And the swing high here was 68. So we'll call that $400 per contract traded. Too many phone calls. All right. So that's the Dow. Okay, so the S&P, 400 bucks. Is that what it was? 300. 6, 5, yeah. 300 on the S&P per contract. That's what the market made available from the entry to the target. On the Dow, 400 and another 400 per contract from the entry to the target. On the Russell, we got a zone at 1482/83. And the zone below that, 1470/71. And then above it is 1493.94. Yeah, 93. 94. Okay, last night, Concierge said, consider being along 1486. Didn't make it all the way to the target. Zones are an area, that'll happen. Sometimes you'll spike it, other times you come up a little bit shy. So there's 1486. Looking for 93. But the swing high was, we'll call it 1490. So 1486 to 1490. 4 points, $50 per point, $200 per contract traded. Gold. 1511, 1512, that was a zone last week and this week. Now, 1502. Slash 1503. And below that, 1492 slash 93. Price always trying to get to a zone. From the Sunday night Globex Open. Okay, what was the zone above that? 1112. Above that was 1920. I didn't quite get there. 1519 slash 20. Okay. So Sunday night, gap higher open. Come down to the zone, consolidate. Market makes up its mind. Inventory is the order flow. Got more sellers than buyers. Let's take it down to the zone below. When we approach the zone from above, we expect it to be good support until it isn't. There's the good support. Bounced it almost back to the zone overhead. Sellers rush in. Take it back down to support. These are 30-minute candles. You get a couple hours. Consolidation again. And then we drop right to the zone below. Buyers come in, bounce it. We come back, tag it again. Bounce. Buyers come in early here. Push it up, consolidate. Push it up, consolidate. Back down to the zone, back up to the zone. It's the rhythm of the market. This zone right here from 93 to 1502. That's $900 per contract traded. Down, up. This one here, 1503 to 1511, that's $800 down per contract. 800 back up, 800 back down, 800 back up. You get the idea. Okay, last night, Concierge said, instead of being short, I'm sorry, long, above, at or above 1517. Never touched it. And the short side of gold was 1499, which no concierge trigger on gold. Okay, in queue. All right. $77.22. Now again, partners have their zones. Monday morning, 6:15 a.m. Eastern. It's a framework for the whole week. Once they're published, we don't change them, massage them, manipulate them. 77.22, 77.23. Okay. All right. Below that, 76.81 slash 82. There's 82. 75.61/62. I messed those up. So it should be 61. All right. Okay. All right. And then up above 22 or 22 78.27 /28. And we won't worry about that one for the moment. And if we just glide back to the Sunday night open, all the indices gap lower. And the gap lower open Sunday night, right to the zone. Try to get, now once we got back above the BBC, we know prices trying to get to the zone overhead. Leg, retrace, leg, retrace, leg. Couldn't make it. That happens. We come back, we drop back to the support area, we consolidate. And the zone below that one, below 81, below 81.82, 75.61/62, way down there. Okay. So for this session, we've gone from the zone up to the zone, back down to the zone, back up to the zone. From 82 to 22, that's 40 NQ points at $20 a point. $800 per contract traded. 800 up, 800 down, 800 back up per contract. Now the alert, the concierge alert for the NQ, long 76.87. 76.87. Alexa, what's 76.80 minus 76.80? Oh, stop. Alexa, stop. Okay, oh, we're gonna try this again. Okay, you with me? Alexa, 77.19 minus 76.87.
7,719 minus 7,687 is 32.
All right, $600 per contract traded. We didn't quite make the target. Okay, the target's at 77.22. We got 77.19. But then, important prices, important areas, almost always tested. We get back below the trigger. Off we go again. This is such a prime example of important prices, important areas. And you see, as we put in that first leg and then we get back below the trigger, look where we find support. At the BBC, at the zone. Either one of those alone we expect to serve as good support. This is good support times 2. And it was, sent this right back up to do it again. Okay. All right, we got one left, crude. That's this one. And I think I got those fixed, 52.80. Below 52.80 is 52.30. Oh man, and I need to save this work before it crashes again. 52.30/35. Got all this consolidation across here. You get up to the zone, good resistance, back down to the zone, good support, back up to the zone, good resistance, back down, consolidation. Now we're making the drop down to that, and look, we touched it to the tick so far. Now the low is 52.34, so we spiked it by a tick so far. Price is always trying to get to a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon. And once I teach you how to discern which zone price is trying to get to, your job becomes simple. Not easy. There's no easy button in trading, but it can be simple. It doesn't have to be simple. You can make it as hard as you want it. You can make it as complicated as you want. You can check 19 different things. You can have, you know, more indicators and oscillators than Carter has liver pills. But it won't allow you to do any better than what I'm showing you right now. It just won't. I mean, not bragging, not boasting, just stating a fact. Because I tried all the other stuff. If Michael and I didn't buy it, we coded it. I mean, standing challenge, if anyone has anything that performs better than this, please come. Let's have a friendly trading challenge. If you can prove to me that it's in any way better than what we have, I'll buy it from you. You know, whatever. And that's not to show we're awesome. That's to help you, the aspiring trader, understand, have a revelation that more expensive doesn't make it better. More complicated doesn't make it better. Affordable and simple to use, that smells like better. Okay, all right. On crude, Concierge said, being along 52.95. So here's 52.95. Okay. So from 52.95 to 53.45, that's 50 ticks at $10 a tick, $500 per contract traded. Back below the trigger, finding that good support at the zone and the BVC for another $500 per contract run. Now, so far this week in logic, remember these were the concierge, the static report, the dynamic 24/7 in the moment as it happens, as opportunity develops. Those alerts, week 62. So far, we've had 41 actionable alerts. 8 of them have been stopped out. That's 20% of actionable. That's what we've averaged for the last 62 weeks. Now, some weeks, you know, we have weeks of 0, and there's been a few weeks with more than 20, but the average over the 62 weeks is 20%, and that's where we sit so far this week. We still have the rest of the day, and Thursday, and Friday. Okay? All right. And we'll take a quick stroll. Going back to Sunday night. Last week, there were 54 alerts, 53 actionable, 3 got stopped out. So only 6% last week. But that's not normal. That's not average. Okay? 20% is average. Now this week, which started this past Sunday night, 6 p.m. Eastern, thumbs up means price found the target. And the red X means it got stopped out. There's a copper that was stopped out. Euro. Australian dollar. This NQ just never triggered. Crude was stopped out. Dow was stopped out. NQ stopped out. Crude stopped out. Another crude stop out. And then here's today's stuff. Okay. All right. Now, whatever you're experiencing in your trading right now, if it's not what you're looking for, hoping for, planned for, if you continue to do the same thing, you'll continue to get the same results. That doesn't mean you should, switch up your swing every time you come to the plate. No, you have to have a large enough sample size with anything to determine, is there something there or not. But if you've been doing whatever it is you've been doing for a long time, and you still don't have, just sending more money to Chicago, it's not going to make it suddenly become profitable. Okay, you got to get in there and you got to figure out whatever you're using, why isn't it profitable? I mean, maybe there is no definable edge. Somebody might have said, hey, this is a great edge, but maybe that edge only shows up in, certain markets or certain conditions. What we do is fluid across all markets and all time frames, and it produces the same under all market conditions. In a sideways market, obviously we won't have a lot of alerts because there's no high probability opportunity. But whether we're moving higher or moving lower, a fast day or a slow day, remember, our methodology mirrors the principle upon which the market itself operates. So, if you want to know more, 949-42-EMINI, email support@cfrn.net, or go to eminitrainingschool.com. Our trial requires no credit card, just your name, email address, and we'll be happy to get you on the trial. And I need to put you on hold for 1 moment, please. I'll be right back.
How much longer will you be working?
All right, I am back, and we're going to wrap this thing up. Let's go to our good word for the day. If you have any questions about anything that has not been covered, please put it in the chat box before I go, and I will be happy to try to answer for you, if I can. Now, we all know that we should have goals, right? Clearly established goals. That's what they teach us. I think it's true. Philippians 3:14 says, I press on towards the goal to win the prize for which God has called me. In 1972, Life magazine published a story about the amazing adventures of John Goddard. When he was 15, His grandmother remarked, "If only I had done that when I was young." Determined not to make that statement at the end of his own life, John Goddard wrote out 127 goals. He named 10 rivers. He named 10 rivers he wanted to explore and 17 mountains he wanted to climb. He set goals of becoming an Eagle Scout, a world traveler, and a pilot. Also on his list was riding a horse in the Rose Bowl parade, diving in a submarine, retracing the travels of Marco Polo, reading the Bible from cover to cover, and reading the entire Encyclopedia Britannica. He also planned to read the entire works of Shakespeare, Plato, Dickens, Socrates, Aristotle, and several other classic authors. He desired to learn to play the flute and the violin. He had a goal of being married, having children, which he ended up having 6 children. One of his goals was to pursue a career in medicine and serve as a missionary for his church. Now, if that sounds impossible, I get tired just reading it. At age 47, he had already accomplished 103 of his 127 goals. That's one heck of a bucket list. Now, your goals, your list, if you have one, and if you don't have one, maybe you should. Give it some thought. Your list of goals may not be as extensive as his. But if you don't have some goals for your life, you'll have little motivation to get up in the morning and little satisfaction when you put your head on your pillow each night. And unless you try something beyond what you've already mastered, you won't grow. So I encourage you today, set your goals in prayer. That's right. Yeah, it's a good idea to get a legal pad and a number 2 lead pencil. Write them down, absolutely. But then take them with you into prayer with God. It's okay to talk to God about your goals. Some he may readily sign off on, and others he might have a different idea. But do you understand where I'm coming from? I mean, if you have a goal that lines up with the will of God for your life, or at least doesn't go against it, then you just might feel a supernatural hand at your back, the wind at your back. Whatever your goals are, if they line up with the will of God and the Word of God, you're well on your way to accomplishing those goals. Define them, write them down, pray over them, talk to God about them. That's a good word for the day. And if all these phones don't stop ringing, I do believe my head's going to explode. Anyway, just another day in the life, right? Okay, so I'm going to leave you here with a look at this daily chart. Let's remind ourselves where support is. We hit the 62, bounced, the 50, rolling sideways. Oh, completely forgot about the minutes. Well, there's a whimper. Did the minutes come out? They did. 11, 12, 1, 2. Boy, that's a non-event, I guess. Okay, all right. Well, from the swing low to the swing high, we hit the 62% fib, bounced. So ask yourself this. Are we doing this? Leg, retrace, leg, or are we doing this? Leg, retrace, leg. Which is the high probability? You know you got resistance right here. And you know you got support across here. Resistance, support. What's the one thing that can help you better understand what the next high probability move is? Price always reverts to the mean. Bearish cross, price pulled away, price pulled back to physically touch the BBC. Down close, and then we dropped about 50 points. No, about 30, 35. Catching a little bounce here, but that bounce, if we were to continue moving higher from here into the close, where does that put us? At resistance. This area is resistance. This BBC represents resistance until we can get on the other side of it and actually hold it on a pullback. Doesn't mean this is what will happen, but that's the next high probability move. Now the narrative can change. If we rally up, overcome the obstacle, move higher, retrace, and this thing holds on the pullback, then we're off to challenge the most recent swing high and even the all-time historic high. Okay. All right then. If you need me, I'll be in Telegram. If you're ready to change your thinking, your trading, and your life, go to Emini Trading School.com. Emini Trading School.com. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.